Well, Wall Street was under pressure again today. Investors worried about the tensions in the Ukraine. Crimea's referendum to decide whether it will join Russia also fed their fears. All three indices fell, their losses tempered by investors buying up some utility stocks as a safer alternative. The S&P 500 is now 2% lower for the week, its biggest weekly loss since late January. Now, while it's been a pretty volatile few weeks for Wall Street, one of the country's most influential investors still has faith in the market. Billionaire Warren Buffett says the Ukraine crisis and China's growth concerns are not reasons to sell stock. All right, for his perspective on the markets, we're now joined by Adam Thurgood, Managing Director at HighTower Advisors in Las Vegas. Adam, thanks for joining us tonight.
It's my pleasure.
So, Adam, markets are down 2% for the week, and there seems that there's a sense of unease returning to Wall Street lately. If we look at the VIX, which is a key gauge of a volatility of investor fear or concern, it was up 9% today, and it's up 25% for the week. So does this fear gauge mean that a correction is imminent?
Well, the VIX started off the year at incredibly low levels, so while we're at about 17 now, we're still in relative terms below where we were, say, during the U.S. debt downgrade of 2011. So I don't believe that the VIX is signaling that there is direct pain ahead, but it's definitely showing you that investor fear is entering the marketplace, but I don't see panic quite yet.
Well, Warren Buffett says that people shouldn't panic, and he says that he expects stocks and dividends to continue to rise, and he actually cautioned against panicked or knee-jerk selling of stocks on the news of the turmoil in Ukraine or concerns over China. So do you agree with the Oracle of Omaha?
It depends. So there's no question that the Ukrainian situation could cause investors some pain. So the answer to your question really depends on your time horizon. If you have a short-term time horizon...
Timing is everything, Adam.
Right. If you have some liquidity needs that are coming up, you should absolutely be worried about what's going on in Ukraine because it could have a short-term impact on your portfolio. But if you're a long-term investor, as Warren Buffett has prophesied for years, you have nothing to worry about, because I think if you look at this situation 5 or 10 years down the road, it will be a small blip on your portfolio's performance radar, and thus is not something to worry about.
All right, but Adam, let's focus on the very near term, and that is Sunday's referendum in Crimea. Investors are bracing for that. Voters are going to decide whether or not to break away from the Ukraine and join Russia. Now, the U.S., the West have said that this vote is not even legal. They don't even recognize it. So what can we expect after Sunday's vote? What can we see the markets doing on Monday?
Well, I'm not a geopolitical professional, so I can't get into the details there with any relevance.
If they vote in favor of joining Russia, how do you think the markets would react to that?
Well, I think the market believes they will vote in favor of joining Russia. I think it will be the U.S.'s reaction to that once it's final that will determine investor behavior for the beginning part of next week.
So if the U.S. does impose sanctions, which market sectors do you think will be most impacted?
That's a tough question. Obviously, any sort of momentum stocks that have done very, very well over the short term could get punished. Investors will probably flee to safety, so I would expect treasuries to do very well, and anything with a high beta to underperform. But to get
Flight to safety, do you think? Flight to safety, the traditional safe haven gold, do you think we can expect a rise in that?
Well, gold's been on fire so far this year with the market pullback and then the geopolitical risk, so I would expect gold to continue to move higher if geopolitical risk escalates.
All right, well, you know, the other thing that investors have been saying that they're concerned about is the slowdown in China. Still, if you look at the data that is causing this concern, while there is a cooling off, factory production rose 8.6% in the 2 months period from a year earlier. Retail sales advanced 11.8%, almost 12%. Now, those are still very impressive figures. So are these China concerns overblown, perhaps?
I think they are overblown. Look, China was growing at double-digit rates in the high single digits for years, and now they're going to grow somewhere in the neighborhood of 5 to 6%. The U.S. would kill for 5 to 6% growth. So it really feels like you're driving down a very fast freeway, and you get off, and now you're on a normal street, and you're going, you know, 50, 60 kilometers an hour, that feels slow after you're going 120, but the fact of the matter is you're still going pretty fast. And the Chinese situation is overblown, in my opinion, for a variety of reasons, and that's one of them.
What are the other reasons that you think it's overblown?
Well, from a U.S. perspective, I think that the Chinese slowdown, as they rebalance their economy from one that is incredibly investment-driven, where they're getting 45 to 50% of GDP from investment, to one that's more consumption-oriented, will actually be a positive, because as investment declines or doesn't grow as quickly, demand for commodities will decrease, and that should put a cap on global inflation. And consumption-based nations like the U.S. or the U.K. should benefit when inflation is contained.
So what kind of reaction do you expect from the Fed? Do you see the tapering continuing?
I do. I don't think that Yellen is about to make any changes to that. The information that we've received on our local economy has been very clouded because of the terrible weather that we've had, and I don't believe that they will make a change to that policy just yet.
All right, blame it on the weather. Adam, very quickly, Weibo filing to list in the U.S. today. What do you make of that? Does it bode well for the markets, an overall positive indicator?
Well, I think anytime you're seeing activity in the IPO market, it's a positive. Can't comment on the specifics, but I do believe that the technology space and the IPO market in general will pick up as the year progresses.
All right, great. Thank you so much. Adam Thurgood, Managing Director at HighTower.